Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention. It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hello, traders. Yeah, I know not everyone is a trader per se, i.e. not everyone does this pretty much full time, and that's pretty okay. At the end of the day, I think that this is doable on a part-time basis, if that's how you do it. It's also doable on a full-time basis, if that's how you do it. At the end of the day, as long as you've got a plan and a strategy, there is absolutely nothing wrong with not being a full-time trader.
The way of the future. The way of the future. The way of the future. The way of the future.
Quote unquote. But welcome back, guys. This is the Greedy Trader channel, and if it's your first time here, then remember to hit the like and subscribe button. Look, guys, I know you haven't even seen the video yet, but I can assure you there is a tremendous amount of value that happens in this channel. And once again, I'm going to say it. We've been around since 2012, doing a lot of videos here from 2014. Can you believe it? We're a small niche channel. We're growing fast, and I really appreciate all you guys who have been hitting the subscribe button and you've been hitting those like buttons. Please keep doing that. It tells the algorithm that we're doing something good here, and as a result, a lot more people are going to see this video and the channel will continue to grow.
You don't quit on me! No! You keep going! You keep going! Go run!
I will keep doing this. I know we got a small niche audience. We don't get a ton of views here, but I can assure you, if you feel that this is going to be the place after watching this video, if you understand that what we do here is just market profile and you've been looking for a channel that solely covers market profile, then this is it. There is no better home on YouTube. Sadly, there is no one talking about market profile on YouTube. You got a bunch of talking heads here and there going on podcasts and stuff, and yeah, I just found out about market profile. I've been trading my ICT and blah blah blah. That's all you get, guys. And you know, take it or don't take it from me, right? But at the end of the day, if all you spend time doing is just trading ICT or trading some system that you can just literally go on Google, then just think about it, guys. The market makers already know that's what you do, which essentially means that you're not going to get any more alpha than the guy who's trading Fibonacci or the guy who's trading on some other system. And we've all done it. If you look through the channels, you'll see that I've covered most ideas and systems around trading, and some of them have been workable into what market profile is exactly where I live. Everything else is a complement, right? And that's the bottom line. So if you're not using market profile, you have no idea, and this is your first time here, then stick around, right? Because this is going to change your trading life. I'm positive about that. However, if you're not new here, then you know how we roll. This is what we do, guys. It's just another video. Okay, awesome stuff. Now, I'm not gonna labor this, right? But guys, I gotta be saying it. You know, there's a ton of crap out there, and that's the bottom line. And trading isn't easy as is. Look, I've been in the institutional space, I've been in the retail space, I've done it all, and I can assure you, if someone has convinced you to become a trader, and you're logging in this video and trying to figure out whether you should become a trader,
What bull?
right? Or maybe you're trying to figure out if you're trying to quit trading, right? Then I can assure you, if you're already having the thoughts that you want to quit this, then, well, maybe it's what you should do because this is not going to get easier. what tends to happen is you get better, right? Not trading doesn't get easier. You just become better and a little bit more stoic with handling your emotions around how this works. You become a little bit more systemized, and that is the reason why I try and introduce everybody to market profile, because it allows you to kind of start to build a system. Look, guys, on my one-on-one sessions, when I worked with traders in the past, I've worked with people who are quants, like who want to build like these systems out and they need some statistical framework to start with. I've worked with people who are a little bit more down the side of I want to do discretionary, and I always try and guide them through market profile. I've got a few tenets, and for those of you who've never seen my videos, go back and watch them. Like, it doesn't make any sense me trying to get into all of it in this one video. But if you go back and look at some of my other videos, I've got my trifecta. That is my guiding light. It's like my angel. It's like my everything. It takes me where I need to be. When I'm lost at sea, I can look up in the stars and I go, oh, there is the trifecta.
Nobody knows.
So I'm never lost, right? I'm always know what I'm sailing. It's why I'm still in this business. Otherwise, I would have pretty much died out like the rest of the souls. But I'm here, right? And I'm here because I do a couple of things. First, I look at time, liquidity, I look at volume, right? And those are really core tenets in what I do, right? Volume's important, right? It's like the participation. People don't like talking about it. They think it's too complex to understand. BS. It is not. It's pretty goddamn easy, right? The bottom line is that you have to have the mental capacity to sit down and understand what's going on. Put yourself in the shoes of someone who is a professional trader, has been given billions of pounds or billions of dollars to manage, doesn't have an effing clue, because 90% of these guys don't have a clue. They come out of university, nepo babies and all of that, and they get into banks and they don't have a clue, right? The rest of them are brokers just shifting here and there, whether they come from Goldman, I can't even say their name properly, whether they come from GS or they come from MS or they come from whatever other bank you can conjure up. Right?
It's a complete and total disaster.
Right? It's all the same. They're no better than you. They've just been given billions of pounds because their parents are rich. Anybody who's been in banking will tell you this is exactly how it works. Right, so now they got a lot of money. What are they going to do? Right, what are they thinking? They got happy trigger fingers like everybody else. They want to buy the lows and sell the highs. Right, so it gives you a framework to understand. When you think about institutions, just think about them like reprobates with money. And with reprobates got money, think about what they do with it.
I'm so excited!
End of story. But bottom line, let's move on. Guys, today we're going to talk about market profile. Yeah. Sorry, I rambled on. I do that sometimes because I really want you guys to get the picture. Sometimes being up here trying to show you all this stuff, it really doesn't make any sense if I don't paint you a picture of what's really going on in wider market, so you don't overcomplicate it. Anyway, today we're going to talk about market profile. As always, a couple of interesting things have happened and I'm going to touch on those, but I'm going to start off with cable tonight. As you guys know, I am a dedicated cable trader. I do other things, of course. I trade other things. I got stuff in stocks, but cable is where I live. So let's talk about that. What did I say last video? Again, for reference. The good thing about what I do here is that it's all on YouTube. I can't BS myself, right? Whatever I put out here is just there for eternity. So you got that safeguard, and I talk trades. I'm not a talking head, right? I'm not here telling you about, oh, I just made $1 million rolling that Lambo. I just made $1 million. I'm going to the store to go do this. I'm not doing that, right? I'm not here creaming off your subscription fees and buying myself Lambos. I'm not doing that because I don't have much of a subscription service. I don't have a subscription service, right?
Look at yourselves. You know, you pass yourself off as cynical people, but you still have some faith in the system, don't you?
People come to me, they need help, I help them out. That's it, right? So I run sessions, but no one subscribes for anything. Well, I don't have a consistent revenue generating tunnel around this other than the trading I do. I don't have that. So when I sit here, when I have to talk trading, well, I can't sell you a subscription or course, right? I've got to talk trading, right? And again, from that, a lot of people reach out to me and say, you know, I need your help, GT. I've really been doing this for a long time and I'm really struggling and I need your help. And I go, okay, cool. I can help you out. It's just my time. That's it. And if you're willing and dedicated and you're committed and you want to get around the other end, then fair enough. I've got a ton of evidence on my YouTube channel of how I do things and how everything works. And, you know, I call out my trades confidently, whether it's a good trade or bad trade, doesn't matter. The bottom line is it's a probability game. As long as you understand how to structure yourself with these trades and structure everything and make sure your planning is on point and you follow my North Star, right, which is my trifecta, then I can safely tell you, you're going to navigate through this crap very, very easily. It's going to be down to your discipline. End of story. If you don't have that, you've got to work on that. But again, people who come to me, I'll help them work on that. I try and set them up with a plan, a structure, something they can follow. Even when they're shooting and they're like, oh my God, you know, my discipline failed and I tried to shoot with a plan, but then I just did something crazy. I'm like, well, it's okay.
Greed, for lack of a better word, is good. Greed is right. Greed works.
I'm going to encourage you to keep going. You just need to get that discipline intact and it will all come together. And like all human beings, sometimes the discipline, it just doesn't work. Right? We're dealing with stuff through childhood. Right? You got to look at some of that Carl Jung stuff, you know. You know, it's just what it is, right? And you know, we can't save every soul. But the bottom line is that if you want to become a trader, you'll find the strength and the energy to make the discipline and become a trader. That is the bottom line, guys. End of story, quote unquote. That's it. Anyway, I've rambled on enough. So what did I say to you guys? Last video, check it out. But look at what we're doing, right? Look at what we're doing. We set up a bid stack, right? So let's run through this. We got a bid stack on the base. We blew out of that. We settled. That normally looks at, we're looking at weekly profiles here. So we're typically looking at week to week. So we blew out on the week. We settled, we opened. We thought, well, look, off a stack, we cleared out, we're going higher. So we did all of that cool stuff. We found some resistance here and then we had bids looking at offers. What do I always say? If bids are looking at offers on a longer time frame, just expect that we're going to have a blowout in the direction of the latest people to step up. We had the offers initially, the sellers pushed it down, they locked it within value. We had a gap in the open, we filled a gap. That's not a problem, it's a price gap, it almost always gets filled. Checkbox, guys.
Hey, I told you to be focused and you're not focused right now.
You should be thinking, when I say stuff like this, you should be thinking, what does he mean? Price opens, fills the gap to the close. Well, when you get a price gap, it's price inefficiency. It's going to get filled, which means you've got a 90% probability trade there that your price gaps are going to get filled within short orders of that happening. Obviously, you can say that this was close of the week, come in Monday, we got a Monday long. Right, when we ran some statistical tests, and we spoke about it in the last video, that it proves that Monday longs are a good strategy. Monday tends to open and run long a lot of the time. So you want to pay attention to Monday potential for long, and you see a price gap that increases the probability to about 90% that you're going to run long. That's an easy trade to make. If you want to build that into a system and say, well, I'm just going to keep monitoring Monday longs, that's what we call an edge, guys. Bottom line. But anyway, I'm not going to talk about that now. So we set up price gap fills. We set bids, and if we break that down, we look at TPO above below, 106 below, strong buying intent. You do the math on that. It's below 1 on ratio. So now we understand something. We're closed higher on this formation, neutral profile, bid stack. That means that we could potentially open long. What do? We do a price gap. We fill the price gap the following week, start of the week, Monday. We go long. Again, guys, what did I just say? Monday, we went long. You don't believe me? Split the profile. There we go. Monday open for a good 4, 8, 12, 16 hours. We were trending upwards. Bottom line, you run the pippage on this, it's solid. Right? In an intraday, you're killing it on a Monday, for sure. Right? What was that? It says, well, we're going up. Right? We hit the offer stack. We pull back. Through. We get rejection under at value. We try to hold. We pretend like we're going to break. And then we get this sweep up late on the Bank of England. Right? So there's been a lot of things happening in the week news-wise, which might have caught a few people off guard. And it was a tough trading week. Because of this setup here, we're breaking under the bid stack and it can look a little bit scary. But as soon as we recovered it, that opened up longs into the next offer stack if we reveal that up here. Right, so it's not complicated, guys. So of course you're going to get from time to time wrong-sided, but that's why we risk manage, right? These are not easy trades to do. Right, it can present a rather complicated week, quote unquote. So that was the longer term profiling cable, and that's kind of what we're looking at when we're trying to digest this as you go week to week. So again, you look at the intraday picture. So you look at where the profile stacked. Well, I can only see back 2 days or about a day and a half for these things. But again, right, for perspective, right, when we deal with shorter term profiles, it's exactly the same concept. And having this tool as an intraday trader, it turns you into a killer.
You better lawyer up, asshole, because I'm not coming back for 30%. I'm coming back for everything.
On the trading floor. And that's because you can say where the order flow is stacked, right? You're using that time price opportunity principle to be able to understand where the orders are stacked. So let's take a look. So again, we break this down time wise. Now these are 1 hour profiles, 5-minute rotations. So if we break that down, that's we're looking at 10 a.m. in Europe, right? So we're going back now to 30th of April, 10 a.m. in Europe. You can assess volume here. You can assess range, IB breaks. You can assess TPO above and below. So you've got a lot of tools there. And what do? Right, so I like to go back to the pre-London and the cash open, which is 8 a.m. London. Pre-London is 7 a.m. So that's effectively on a MT4 broker or MT5 broker, it's a +2 UTC. Or let's say +2 GMT, depending on how you want to look at it. Right, so again, 0900, we got 7 a.m. and this is the cash open. What happens on a cash open? Really, really simple. Whoops. I think that where my record button's sitting, I can't get access to the rest of my panel on this thing. Oh God, talk about an oxymoron of a situation. Anyway, never mind. We can still work through it without me needing some of these. Okay, I've managed to adjust it. My apologies. However, right, so I've managed to get this tool up. Sometimes things are a nightmare when you're doing these technical things. Anyway, moving on. So again, you can see the cash open, right? And that was, you can see here, it was 8 a.m. And if you look what happened, we set the cash open. We have what looked like a responsive seller. And what do? We trade above the high of the cash open, right? From an intraday standpoint, we look at the volume. We got 8,500. We got 8,521. We got slightly higher volume here on the cash open, which is how it's supposed to be. And then we break the highs, right? That's telling us that people are long. But it's sometimes, if you're working with candlesticks, and I always say to you guys, you want to stay away from candlesticks.
How did I beat you?
You're too fast.
Do you believe that my being stronger or faster has anything to do with my muscles in this place? You think that's air you're breathing now?
But let's say you're working with candlesticks. One of the first things you're going to notice is that one, we had a bid stack here, and here we built into offers and closed lower under the open. So you're going to start to think, well, we could cut short from here, right? And that means that you're looking at this bid, these bids as the ones to hold up, which means value low is going to be the critical point. Again, you want to reference the entire bar because we've also got an initiating buyer A period. So for me, as soon as this bar goes low, then we want to go short naturally. But if we've already broken a high, which means we've got higher prices at essentially much lower volume. Again, you look at that, oops, maybe not. And we got 9634. So slightly higher, looks like a climax, but then we trade above it. So we got much higher prices at much lower volume, which we can see here. So we can see that volume starting to taper off by the time we get to the 10 a.m. open. So we want to be very, very conscious of what we're seeing when we look at these kind of things. So again, even if you were short, right, it's not a big deal. You could have been short. You can easily reverse that position. And we had some considerable upside going into the US session anyway. But a key thing to note is that we had what looked like an offer stack and then we ran it, which would tell you that 90% the traders who are up here, they're going to have their stops run and we're going to get some big movements from there. So this now becomes the support for London. And then we start looking at this thing going much, much higher. So when we think about it from this perspective, we understand that these bid stacks and this trifecta that I have, this time, liquidity and volume perspective, acts as my North Star. So I can only get into a position bad once, all right? I'm not going to be in a bad position for a second time, because on a, take for example, this particular setup, well, if I split the rotation over the 5-minute frame, you can see we opened, we got a rejection in C period, and then we start to build back up. So as soon as we started to look above value high, that's my trigger to be long. I don't even need to wait, because we should not be trading above value on this much volume, right? We shouldn't be doing that. So as soon as we're doing that, I'm positioning to get long. Really simple. It's not overcomplicated. I can wait for the bar close, or I can execute. It doesn't matter. And if I waited for the bar close, I just need to get a trade back in value. It doesn't matter if it's value high or value low. As soon as we re-enter value, that becomes a trade. You've got 18 ticks to protect this, because you shouldn't be back under the 9 a.m. I say 9 a.m. You should, yeah, exactly. You shouldn't be back under the 9 a.m. London level. You should really be going upwards. Again, if we come back under that, then we're in trouble, right? So typically, if you're short, you reverse the trade, you go long. You should be able to capture at least 2-to-1 on trades like this, depending. Obviously, this was a much bigger mood, but you're going to get 2-to-1 basically. So this is how we got to think about things like this, right? So again, so that's if we go into the intraday. Anyway, guys, look, I'm going to back up a little bit, right? Because there were other things I wanted to talk about, but I'm going to leave this video just to talk about cable today. So again, if you're not cable traders, I understand. I'm sorry. I had to talk about this, right? This is my primary asset.
Whoopsie daisy!
Anyway, moving on. So if we back up to the weekly profile, right, you can see what happened as we fast forward into the week. So again, you can see us hitting to that offer stack. So if we were trading intraday, right, look at the dilemma, right, as we move fast forward to what happened when we hit that weekly offer stack. So we started out nicely. This was also a tricky day, because this was the pre-London. This was the cash open, right? We started to accelerate lower. Let's say you got it wrong again. You started to cut short here, right? It's tricky week, right? And then you can see us break, hold for close. You say, well, I'm going to go short from value, and then it reverses and closes a little higher. Well, as soon as we started to take the cash open price, the cash open level from London, you can see the initial balance here, and we're breaking, then you want to be long. This would have taken you a little bit further up, but it's very possible that you might, it's 43 tick run, but let's say you didn't make your target and this thing started to tumble over. Well, in Chicago, right, this was Chicago session, again, time, right? This was a classic short. We traded low. It was a bit more of a range to cover, but again, look where we ended up for the rest of the day. So there were some tricky points here depending on the session you're trading. I think the best opportunity really was in London, but again, if you missed that and you thought, well, I'm going to trade the US so I can catch the US move, then there were only two things that were going to happen. It was either we're going to hold on Chicago and then that's a new high, different volume spectrum. Obviously Chicago was the highest volume for the day. Bottom line is, if we're taking that high, it was done. We're going to have another day that we're gonna open next week pretty strong, right? More than likely, if any sell-off comes, it will have to be in the next US Open. So again, this is just a reaction of weekend, in my opinion. There's a lot of fear out there, so people needed to get out on the weekend because we've done max range for the week, and you can see that. Right, that was the offer stack. So that burnout you see in C period on the week is exactly what you're saying on the intraday here with the Chicago move. So institutional floor traders in Chicago, institutional traders, blank stop, just thought that they wanted to kill this back down again ahead of the weekend. So it became a great short. So when you see that, when you understand the concepts of how Nepo babies behave when they got a lot of cash, then you start to understand that, okay, if I'm seeing a big move like that, someone's decided that they're smart and they're just going to short the Chicago Open as soon as they hit the floor. So think about when you give a baby some ice cream and then they just come running in, mummy, 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 with the ice cream, and it's all going everywhere. That's exactly what's happening in Chicago. We're now extreme highs. Those traders always like to sell the highs, so they come in and they go, let's dump billions into this and let's crash this whole thing. And everybody else now, you can say from the build up, now starts to chase their coattails as they get on the text messages and start telling their mates. There's no insider trading, I'm afraid, on currency. Start telling their mates, let's get short, let's get short. Nepo baby stuff. Anyway, guys, to my next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?